What makes more sense for long-term savings, a whole life policy or a term life insurance policy?
Whole life insurance, as its name implies, can provide insurance protection for as long as you live, your whole life. Term insurance, on the other hand, covers you for a specific length of time, a year, 10 years, in some cases 20 years, although you can renew the coverage at least up until age 80 or so. The annual policy premium on a whole life policy tends to be much higher, say 5 to 10 times or more than what you would pay annually for the same amount of coverage or death benefit with a term policy. The reason is that only a portion of the premium pays for the actual insurance protection or the death benefit, which is the amount that the policy would pay your beneficiary when you die. The rest of the premium goes to the investment component of the policy, known as its cash value, which grows as the insurance company pays dividends on the policy. I say that the vast majority of people are better off buying term insurance for their insurance protection and then doing their investing outside of life insurance policies rather than mingling the two, which is what you're doing when you buy a whole life policy or other insurance that has an investing component. One reason is that by investing outside the policy, you have access to a much wider range of investments that have lower costs and a potentially higher return than an insurance policy. I'm talking about regular mutual funds, index funds, ETFs, or even individual stocks and bonds if you're so inclined. But there's another reason I think term is a better bet for most people. The main purpose of insurance is to provide enough cash for your family to continue living a decent lifestyle should you die. But given all the competing demands for their income, the fact is most people can't afford the amount of insurance protection they need if they try to do it with a whole life policy. The premium would be so high it would wreak havoc with their budgets and prevent them from doing necessary things like saving for retirement in tax-advantaged plans like 401ks, IRAs, and the like. Because term insurance premiums are so much lower, there's a much better chance you can get the amount of insurance protection you'll need by buying term, and you'll also have money left over for life's other expenses, including saving for retirement.